Hi, this is Joe. Mentioned about a month ago, we went into bubbles and the history of bubbles and how the price action today, when you look at the indices, doesn't really, I don't think, have the same type of attributes that I would consider to be in a bubble. But I did find a correlation that I find to be, I think, fairly important right now because it does qualify, in my view, based on all the characteristics of what I would call a bubble. So we're going to get into that. One thing I wanted to mention, I have started doing some mentoring, some coaching. So if you're interested, if you'd have an interest in doing that, email me at info@investlikeapro.us. I'm going to put the link underneath. And I'm also going to use TC2000 in this video and show you some capabilities from this for this software. I think it's not free. It's something you have to pay for. But I think if you're a little bit more on the serious end and you want to do some screening and have a lot of high-end ability, I think for a retail product, it is very, very powerful. There's a link for that as well. If you click on that link, you do have the ability to get like a $25 discount or something like that if you go through that link. So keep that in mind as well. So we're going to start. I'm going to look at something that I think is important to know. So what I've done is I've taken the S&P 500 chart and or the list, and I've sorted it. You can see what you're able to do in TC. You can put any type of percent change you want. I've created sort of this little matrix that shows how it's done over the course of a week, a month, 3 months, 6 months, and a year. And so I've taken this list and I've sorted it by the 1 year percent change. And if you notice, what I've done is I wanted to put the company names there, and this is about the top 20. But look at the sectors and look at the sectors that make up this list. I think it's pretty important. The three main sectors, let me just make sure I'm going to get it all the way to the top. It's not actually starting at the beginning. So Dexcom is actually the #1 performing stock for the past 12 months. And then NVIDIA, and then REGN, so as you work your way down. So these are essentially your top stocks. And again, if we look at what sectors are making up this list, it's generally, I would say for the top 50, maybe even the top 100, you're going to see a lot of stocks that are in healthcare, technology, and consumer cyclical. Every now and again, you'll get a straggler, say like this Old Dominion is in the industrial sector and it's been a strong freight guy. Newmont Mining has been a good stock in the basic materials. That's a gold stock. But for the most part, we're looking for general situation. I would say that's what we're seeing. Now, if I flip this around and we look at these are the worst stocks over the last 12 months. And again, we can go and see, yeah, there are some stocks that, there's a few, maybe technologies, some consumer cyclicals. But if you look at generally speaking, you're going to see a lot of energy stocks, a lot of industrial stocks. And as I move down, you'd probably also see some financials and stuff like that. So because the technology sector is so big, you're going to find, some incidences of technology pretty much all scattered all throughout. But we're looking for sort of general things. And so, I think what makes this interesting to me is when you start to look at what sectors have been really strong versus which ones have been really weak. And for the most part, it has been for the last 6 months and for the last year. And in some cases, it actually, even for the last month, there's been some acceleration. So, if we start to look at the charts of these things and go through, you can see it is a mix. I mean, you've got the stocks. Dexcom is actually one that I mentioned in the bubble video about a month ago. Like I said, I think this actually qualifies. It has some of the attributes of what I would consider to be a bubble. NVIDIA doesn't really qualify from that standpoint just because it went through such a deep correction. And so, yeah, it's short-term overbought. but I don't know that I would consider it to be, any type of like what I would consider to be a bubble. I wanted to make this distinction for the reason, and the reasoning is that just because I say something is not in a bubble does not necessarily mean there's not some pullback risk or some serious risk in a stock. And if Nvidia were to go up a little bit more or even pull back right now and then go up another leg, I think it sets itself up for a lot of pullback risk. And it already has it right now, because if you look, the monthly 18 is way down. If we were to look at where the price of, let's just get this up and so we can see. So I've got Old Dominion up right now, but let's go back to something like Nvidia. And if you notice, the 18-month line currently is at 233, and the stock's at 424. So the farther you get away from this line, the more risk you have when you pull back. And if you can do that, and if you look at the weekly, and both lines are getting too far away, you're creating a lot of pullback risk. What I would consider to be pullback risk is when you get too far away from any specific moving average that you're looking at in any specific time frame. So in both of these time frames, you have pullback risk because they're a pretty considerable distance away from the MA lines. And again, my key lines are the 18 and the 40. So typically I'm going to look at that 18 first. So as we go through that list, I think it's interesting to see, because these have accelerated so much this year. I'm going to pull up one more chart, and I think it's pretty important to recognize, and go back through my video on the bubbles, because if you look at the chart and the fact that you continue to accelerate, in a lot of those examples that I show, historically speaking, I think the criteria is met with this growth versus value. And it also, from a psychological standpoint, the fact that people just cannot get enough of the same group of stocks, it makes you wonder, how this is possibly going to end. And I don't think it's going to end pretty. I think it'll end ugly. The problem with not owning the growth stocks right now is that's really where the money is being made. And if you go back through, historically speaking, if you go back through when these peaks are in place, a lot of the money made, some of the biggest money made, is in the last leg. So I'm a big believer in staying long until a trend is over, but you do have to recognize when a stock is making a vertical move. And I think the idea is to scale out of your position. I think you don't want to sit there and hold a stock forever. What you want to do is take advantage of something. If it gets too far away from its support levels, I think you want to take part of your position off. And I have described numerous times in the way that I scale out of positions, and you can do it based on the original risk of the trade, or you can do it based on the average true range, the average range of a stock. And then you can reduce the risk as it's moving in your favor. And then you might be left with the last quarter of a piece that is going to be subject to pullback risk. But you've taken 3 different profits along the way and booked a pretty considerable gain. So we don't know when this type of pattern, this is growth versus value. I'm using the IWF, which is the Russell growth, versus the IWD, which is the Russell value. And you can see it's getting out of hand. It went through a long period. If we went back and looked at when this started, it was back in 2007. And you started to accelerate in 2017. And then you've accelerated again here in 2020. And now it looks like it might actually want to make one more push here and get a little bit out of control, maybe even make this vertical. We might need a little pullback first and then go one more time to really meet that criteria. But I guess the point I'm trying to make is you have to be really careful. If you've been owning stocks like Microsoft and Apple and while these and Amazon and Netflix and the list goes on. The stocks that have been the top names, a few of the ones that I just showed you, like Dexcom, the stocks that are really the big names like Amazon and Apple and Microsoft and stuff like that, those are the ones that are going to carry more risk if they keep going. In other words, if they don't pull back soon, or if they pull back in a minor way and then take off again, then you have to assume that there's a significant amount of pullback risk. And even if they don't really qualify as a bubble, it doesn't mean that they can't go through a very serious corrective wave or make some form of a bull market top. So we want to be on the lookout for that. And then on the other end of the spectrum, you're looking. There's no reason to rush to go and buy the stocks at the bottom end. So if I were to go back and look at this, if a stock's in a downtrend, don't just dive in because something's down a significant amount. I hope I've shown you through my charts and the patterns that I use and what I talk about in my book that there really is no reason to just jump into something just because it's nosediving to the downside, and really want to prevent stocks that are in downtrends on both the monthly and the weekly. So if that's the case, you have to be really careful, looking at stocks like the cruise lines, airlines, a lot of energy stocks. I mean, we want to wait for a sign that there's a reversal that's taken place here. There's no reason. There's really, I've done this for 30 years now, and I've been doing the technical analysis for about 30 years. And, I got to tell you that I think it's very, very difficult to make money going against the monthly and the weekly trend. So my advice to you would be is you don't have to be a hero and try and buy it when it's way down. Wait for it to stabilize and work sideways for a period. I talk about several things in my book about, waiting for the sideways line to develop and look for a breakout from that pattern, or wait for it to turn into an uptrend and then buy the first pullback. So that would be my advice to you. I think it's important to recognize the difference between uptrends and downtrends, but I think the bubble that's developed right now, it is a little scary because I think it will have repercussions to the general market. But I think the most important thing that you can do in this situation is make sure you're kind of avoiding the downtrends. And when you're in an uptrend, scale your way out, because we don't know when this is going to end. And when it ends, it could be ugly. So anyway, I hope this was helpful. If you're not a subscriber, please hit that subscribe button. And if you are, please hit the like button. All right. Thank you.